All right, first up on the show, we put the spotlight on ZYOD. It's a tech-enabled fashion manufacturing platform, and they have secured $18 million in a Series A round of funding. The investment was led by RTP Global. Let's connect with Ankit Jaipuria, who is now joining in as the co-founder to talk a little bit more about this fundraise. Ankit, thanks so much for taking time out. Take us through what exactly these funds are going to be utilized toward.
Hey, hi. So, see, the primary agenda is three-pronged with respect to the use of funds. One is primarily where we would expand the global presence of ZYOD from the current 18 countries to 40 countries and further deepen our wallet share in the current global countries that we are servicing. Second is primarily on the lines of expanding our product capabilities. So India has been divided into different pockets of capabilities. For example, South Tirupur is good for knitswear, Bangalore is good for denims wear. So we would expand our supply capabilities in different pockets, which will open new markets for us, as well as open upselling, cross-selling opportunities with the existing clientele that we serve. And third, and the most important, is on the tech side, where we are in the process of revamping the overall fashion ecosystem. So earlier, the whole industry was very reactive in nature, which we made proactive through building our ERPs and are currently making it more predictive by using the data sets that we have collected across different styles, their quality, their timelines of a certain step. And we would now focus also on the automation part or automated supply chain, where we will enable IoT solutions and completely revamp the overall supply chain from being reactive to proactive to predictive and eventually automated.
Right. So, Ankit, given that the company actually takes care of end-to-end manufacturing in apparel when it comes to design as well, give us a sense as to which are some of the retail companies that you are currently working with and which are the other clients that you're looking to add to your portfolio.
Absolutely. So see, ZYOD evolved from serving very small and mid-sized customers when we started in January 2023. And since then, we were able to sort of create a supply chain solution which was giving them inventory less options. And this was one of the biggest problems for fashion brands. So last October, we started going into the enterprise brands where we have built the fundamentals for a strong supply chain. And the service that we provide for these enterprise clients, the ones you mentioned, is primarily on the lines of enabling a growth loop for them. For these fashion brands, inventory loss was one of the biggest problems. So when they launch something with ZYOD, they can launch more styles without the risk of inventories, given that we provide them a faster turnaround time and minimum order quantities are lower with us. And through that, these brands can launch more styles without the risk of inventories, understand from the market trends what styles are performing better, which attributes are performing better, and then double down on those better performing attributes as well as styles.
What is the outlook when it comes to your financials? Are you EBITDA break even? Are you making money right now?
So it's a very straightforward model where we have at one end the brands whom we serve, the fashion brands, and at the back end we have or supply chain partners or manufacturers. So the business model is fairly straightforward where, let's say you are a brand, we have served you or sold a product for, let's say, $100, and we would be procuring that or buying that product at 80 rupees or $80, and that $20 is what we are making as a margin. So that's the overall business model. It's just that we are more of a full stack player. Imagine us to be more of a Marriott hotel chain where we go narrow and deep in the supply chain partners that we onboard and that we collaborate with, and we standardize the service from end to end. For example, how any building of Marriott can be owned by any Tom, Dick, and Harry. but Marriott runs it through the process, the check-in experience, the overall amenities that they provide. Imagine that is what ZYOD is doing in the manufacturing ecosystem for all these SME manufacturers that we partner.
So overall, given that you're talking about being one of the leading players in the B2B fashion manufacturing ecosystem, give us a sense as to how many customers you're serving across how many countries are you currently working in, and how you plan to grow some of those metrics going forward as well.
Absolutely. So see, we are serving over 350, 400 customers across 18 countries, and that is spread from east to west. So we are serving Australia, Japan, Middle East, Europe, and the States. So it's a well-versed global business that we have built. And the idea is that all of these brands are being resounding with one major problem that we have solved for them, which is the inventory loss, which was one of the biggest killers for these fashion brands.
And what's the long-term vision then for the company?
So there are two aspects to it, how we see the business to grow. The first is primarily the focus for the current 3 years of time, where we have onboarded many enterprise customers across the globe. And the focus is to further deepen our wallet share with each of these customers and build those predictive cash flows. How I see this business to evolve post 3 years, we have been building our zero touch self-serve sales platform, which you can actually explore on our website, on the app, on iOS, Android, where the long tail brands can come, log in, get a curated catalog, and without any human involvement, they can place orders and get fulfillment. So this is something which will start driving the business share as the sheer volume of these long tail customers would increase manifold post 3 years. So just to summarize, the current focus would be primarily to deepen our wallet shares from the enterprise customers that we have onboarded globally and drive our growth through that. And post a period of 3 years, there will be another phase in the company where the self-serve platform will cater to enough long tail customers who would be then driving the next leg of growth of the company.
Okay, good to have you on board. Thanks so much for taking time out and joining in.
If you like this video, then like, share and subscribe to ET Now.